Yeah, good morning, traders. A reasonably lively trading session, certainly in US equity markets and also in energy commodity markets, but I think a bit of a messy picture coming through in FX markets and rates. I think if we have a look at our Asian equity calls at the moment, it's going to be a fairly flat picture. Certainly ASX 200 called up about 20 basis points. We expected to see a little bit of selling on the outset of the cash market, the Hang Seng. Another flat market coming through in the Nikkei, which of course is going to be very much in focus along with dollar yen as we look ahead of that Bank of Japan meeting a little bit later on in the session. I think if we have a look at one of the sort of factors we saw was a bit more pushback from Fed members. We heard Austin Goolsbee again saying he's a little bit confused by market reaction. We did see Loretta Mester saying that financial markets have got a little bit ahead of themselves, and also Raphael Bostic saying that he's going to be voting for 2 cuts in 2024, but they're not going to be starting until the third quarter of next year. Now, importantly, Loretta Mester and Raphael Bostic will be voters next year on the panel, so their comments do carry a little bit of weight. But we haven't seen too much reaction across markets. Certainly, no real reaction across Fed funds futures. Go further out, we've seen about a basis point or two. If we have a look at SOFR 3-month forwards futures, you can effectively see a little bit of selling coming through in greens and blues in the 2025, 2026 contracts. But that's really sort of taking them out about 3 basis points. And you've seen that ultimately in the Treasury curve. If you have a look at 2-year Treasuries, they're currently sitting at 2 years at 445, up 1 basis point. So no real gyrations on those comments. We've seen a little bit of selling towards the back end of the curve. 10s are up about 4 basis points. So a little bit of a bear steepening playing through. And I think that's going to be a continued trend that we see playing on the dance floors. Equities haven't really responded at all. I mean, they continue to be very, very strong. If you have a look at that tape that we've been seeing in intraday of NASDAQ futures, just late European trading session, early or pre-US trading cash session, we saw the buyers really step in. It's been one-way buying right up into where we are at the moment. We're just shy of 17,000 on NASDAQ futures. You saw S&P futures trade above 4,800. We've just seen a few sellers just in the mix at that point there as well. Volumes pretty much in line with expectations, or 30-day average on the cash markets. And actually, if you have a look at the internals and the sectors that are working on the S&P, we've got 56% of stocks working on the day. It's really consumer services which are buoyed up at the moment. You've seen really good gains coming through in Meta, Netflix and Google also putting some points. Staples and energy working quite well. Certainly energy being buoyed up by a nice move up in crude. We saw Brent prices straight up to 79.50 on the back of these Suez Canal disruptions, with BP obviously detailing that their tanker transports are being curtailed through that obviously very important transit route, something we're going to be watching very closely. But we have seen a few sellers off those highs in Brent. We're trading a little bit lower from those points as well. I think it was European natural gas which really got the attention. That was up about 12% at one stage and settled up nearly 8% on the trading session. But certainly energy stocks working quite well, as we saw in discretionaries. It's really REITs and utilities which are underperforming on the day, but certainly we've seen a nice move up in equity prices. If we have a look at FX markets, the dollar's had a pretty messy picture on the trading session, as you can see. Euro dollar got up to sort of 109.31, and we just sort of traded sideways in the sort of 109.31, 109 range through most of US and European trading session. We've obviously seen that, in the reaction and percentage change, the NOK continues to do quite well. That's a trade that we like at the moment. But you've seen a fairly mixed picture playing through. We talked about the commodity move there. As we look ahead, obviously all eyes on Bank of Japan. We've got the RBA minutes playing through as well, and that should continue to reinforce the idea that the RBA are probably one of the more relatively hawkish central banks at the moment. But the Bank of Japan meeting should be coming out later in the Asian trading session. Of course, there's no set time for that. If we have a look at overnight implied volatility in dollar yen, it's currently sitting around 32%, obviously very, very high, or certainly elevated. So the market is on edge for some sort of movement from the yen. So obviously that's a consideration for your risk. I don't think anyone's expecting any kind of changes to the negative interest rate policy. Maybe they set the platform for January, maybe April. Maybe there's going to be further tweaks to YCC, but I think market's already seen that as a bit of a dead. But that implied volatility saying the market is expecting move in dollar yen. We're rallying in dollar yen into the meeting, so do keep an eye on those exposures there.